Here it is, the million-dollar question that everyone keeps asking me. If mortgage rates start dropping, and to be honest, they already have, will housing become more affordable again? Or are we just about to see another price surge that just shuts the buyers completely out of the market? And today, what I want to do is I want to break down nationally and right here in Northern Nevada so you know exactly what's coming and how to prepare. Because interest rates are what everyone is always talking about. We've been talking about this now for years. And what interest rates actually do is they dictate how much home you can actually afford and how much you can qualify for. And even sellers sometimes decide on when they're going to list their home based upon the fact that many sellers also turn around and become buyers as well. And so it definitely affects both sides of the equation. So over the last handful of years, we've seen a roller coaster of interest rates. They were historically low during COVID in 2020 and first part of 2021. And then rates went skyrocketing through 2023 and we're up to 8%. And now we've seen over the last year or two, rates are starting to ease back down. So what does that mean for your wallet? And especially for buyers and sellers in Reno and Sparks and Tahoe and Northern Nevada. And let's just back up for a brief second because I think a lot of times people don't really understand housing and where interest rates actually come from and why they matter so much. If you thought of interest rates just like the price of gas, it determines how far you can drive your car. And what the cost of money does, or interest rates do, it is the cost of borrowing, and it determines how much money you can afford. So obviously, if more people can afford, more buyers get back in the game. And that's what this whole interest rate discussion is all about. So quickly before we go there, I want to talk about where do mortgage interest rates, not the Federal Reserve interest rate, but mortgage interest rates, where do they come from? I think people confuse when they see, for example, when the Federal Reserve is talking about lowering what is called the federal funds rate, which is not a mortgage interest rate. There's no direct correlation. What this rate is the overnight rate where one bank is loaning money to another bank. And of course, if those numbers go up and down, it ripples through the entire financial system, but it is not a direct correlation to mortgage interest rates. So mortgage rates are more tightly connected to what's called the bond market. And mortgage rates are closely tied to what's called the 10-year Treasury bond. And why is that? It's because investors treat mortgages as a more long-term investment, and the 10-year Treasury is sort of that benchmark. And typically, as that goes up and down, that's where you'll see interest rates go up and down. But when those rates go up, there's always this pricing piece. So lenders, there's a gap. So let's say the bond yield is 4%, and then what they put in is this risk premium. And when the market is higher risk and they're worried about more defaults and they're worried about inflation, that gap can become bigger. And that's where you start to see those rates at 7 and even 8% as those Treasury yields start to come down and the market becomes a little less risky, then that narrows and you'll see start to have rates more along the lines where we are now. Now, at the time of shooting the video, we've been sort of in this 6.25%. A week ago from the time I did this, it was the number one, lowest rates in the last 12 months. So why does all of this matter for housing? Because the lower the interest rate, the more affordable the housing market becomes. And the higher interest rate prices people out. And typically though, as rates go up and down, pricing could go up and down. And this is where that big discussion is. But real quickly, if you had a $500,000 loan at 7% versus a $500,000 loan at 6%, you typically can save about $300 a month on your principal and interest portion of your payment every month. And that, of course, would allow more people to qualify or be able to afford a lower price house. So I want people to understand that just because interest rates come down does not necessarily mean that homes are going to become more affordable, because typically if rates come down, prices will go up. And that, again, going full circle, is the million-dollar question that we're asking ourselves. And I've heard lots of different stories, and I know everybody always wants me to break out my crystal ball and tell you what I think about where all this is going to go. And I'm going to do that today, which I don't normally like to do. If you're someone who's thinking about moving to Northern Nevada, do me a favor. Click the link in the description below. We'll get you a copy of our free buyer's guide that will get you all the information you need to start your journey to buying in Northern Nevada. If we lower interest rates, typically you think prices are going to go up. And I've been saying in videos now for quite some time, the biggest issue in the real estate market is housing affordability. If we think now that a lot of people can't afford a house and it's become as unaffordable as it ever has before, what I'm hoping happens is if rates start to come down, that at worst, prices will continue to stay flat. I've heard some people say they even think prices are going to go down. And obviously, neighborhood by neighborhood and city by city, all these things will have different behaviors in different parts of the country. And so everybody's going to have a different feeling of what happens. But I know here in my local market, there are some factors of supply and demand and the cost of building and things that I personally don't see how prices in my area are going to go down. Will the market become more affordable? If rates go down and prices stay flat, absolutely they become more affordable. They're still not amazingly affordable. And why is that? The same factors in supply and demand that have been going on now for quite some time, ever since the Great Recession back in the 2006, 7, 8, 9 range, they haven't gone away. They're still there. There is not enough inventory. There's still not enough new construction. The cost of building new construction has gotten as expensive as ever. And whether tariffs have an effect on that or not, whether the cost of employees are going to have an effect on that, whether getting the materials from wherever we're getting the materials to do all that stuff, it is not getting any less expensive to build a home. And so because of that, I don't know how a builder is going to be able to build low price, inexpensive housing, at least in my market where I live. And so I just don't see how things get substantially or dramatically cheaper. Now, prices have already come down. People don't want to believe that, but over the last 2 or 3 years, we've seen this subtle decrease in pricing. So for example, at one point I could have probably sold my house for $700,000. And then for a while there, I probably couldn't have got $600,000 or maybe $625,000. And now I'm pushing back towards probably $650,000 to $670,000. But a model match around the corner for me that is a nicer house, it is in a better lot, is more upgraded than mine, sold for low 700s. So you're seeing these prices bounce around and things move around, but for the most part, for the last 3 years, the pricing has stayed flat. The best case scenario to me for my market here in Northern Nevada is this. Interest rates will come down, and we're going to find out because people are predicting whether they're going to come down. Again, they're saying the Fed is going to lower the Fed funds rate 3 months in a row. And if they do, great. We've been talking about this now for 2 or 3 years, but there's no economic factors as saying why they should do that other than everybody has their political beliefs on the president is forcing this to happen because they want to get the economy going again. They want people to be able to afford more housing. But I can tell you this, as someone who has 2 kids in their 20s, for young people right now, the housing market has become as unaffordable as it ever has before, especially where I live for people. Here's what you need to understand. You need to figure out when is best for you as an individual, what time, what effort, what price point, what neighborhood, what community that will work for you, because I just don't see how it is going to get dramatically more affordable. Now, I hope I am wrong, and I hope for you out there that are having a hard time affording a house and not being able to do it, especially as one person, because it's become really a 2-income world. But I know lots of people that are married or getting married or living together that also have a 3rd or 4th person living with them so that they can afford the rent or afford the house payment to be able to start saving up long-term for housing. And you see a million videos about renting versus owning and which is better. But you have to know this. Rates probably will come down. It won't make things dramatically more affordable, but it is going to go ahead and increase competition, which if it does, then you would think will drive prices up a little bit. So I think lowering the interest rate and the raising of the prices is going to be some sort of a wash. And I think we're going to be in the same boat that we're in now. And I don't see how this changes going forward. So if you have questions or stuff about your specific situation, reach out to me. I'm happy to have a conversation with you. But unfortunately, I just think the unaffordability issue that we've been talking about for quite some time is here to stay. It's not going anywhere. And for you young people, if you're trying to figure out a best way to make this happen for yourself, let me know. I'm happy to sit down with you and we can put together a 12, 24, 36-month plan in order so that you can buy a house if that's something you want to do and figure out where that first house might be because it won't be your dream home, and then where eventually that might be the 2nd and 3rd houses. And then we'll see what happens as things move forward. But in the short term, for let's say the next 6 to 12 months, I just think this is what the market's going to be. If you're someone who's thinking about buying a home here in Northern Nevada, do me a favor. Check out this video we did right here all about the problems, questions, concerns about affordability in Northern Nevada.